All right. Hey, everybody. Dan Fitzpatrick here at stockmarketmentor.com. And first, before I get on to WAGs here, as I call it, GeneDX, that's from Billions, by the way. But anyway, I want to let you know next week you're going to be getting an email or probably a series of them introducing TradeTrack and StockWatch to tools that I've been working on for quite a while, and they're finally ready for prime time. And so I'll be telling you more about that. We've already had beta testers on this for a while, so they're finally ready. I'm going to tell you all about both of them next week, and it's going to be awesome. Really looking forward to it. So watch your emails, okay? Now, with this, GeneDX. This has been in a really, really solid pattern here, and I want to show you, I'm going to show you exactly how we did this, like where we really got into this stock. But first of all, just let's kind of walk down memory lane here. So back in 23, stock runs back above. It'd been doing really, really bad. Obviously, this is a bottom. I don't need to tell you that unless you're blind. If you are, I'll tell you. November of 2023, the stock bottomed in a V shape. Anyway, so ever since that time, it crosses the 50, then it jumps above the 250, and then about 3 or 4 weeks later, the 50 crosses above the 200-day moving average. And at that point, you really have a confirmed uptrend. And the stock just kept running. And notice, when it comes back down to the 50, this time it didn't even touch it. But this was a great buying opportunity. It held right around 12 bucks. It's kind of squeezed here a bit, and then this is off to the races again. Then again, in August, it hits the 50, recoils higher, hits the 50 again, recoils higher. So this was one big long consolidation in July and August. So this is healthy. This is not an unhealthy thing, you know. This is a nice consolidation, healthy consolidation. It kind of gives the stock room to kind of gather itself for profit takers or just sellers to come in and exchange their shares for cash. And then we see in the chart, we don't know this up front, but then the chart indicates to us that there's plenty of buyers that are happy to soak up whatever supplies there. They're not really just like buying it hand over fist, but right around 35 bucks. Sellers come in, and then there's some buyers that are kind of gently taking the stock that they can. Ultimately, then this gets slammed back down, but again, it recovers. So then they're still taking stock, buying it a little bit on the way down, and then finally, bam, 30 bucks, give me all you got. Volume was a little bit heavier then. You can't really see it here because of these other skyscrapers. But so they're buying the stock here again. Now the stock's off to the races once again. Then, starting in late October, we start getting this sideways consolidation that we're actually still in. Stock had first come out of this squeeze right here. Really, really nice textbook squeeze. You'd want to kind of be buying right around in the low 80s, maybe wait for it to hit 85. But probably would be buying there anyway. But right around here, you're getting into this squeeze, this pop out of a squeeze, because it's pinching right above the 50-day moving average. This is a perfect textbook touch and go pattern. It's really what I call a money maker pattern, because when you see it, you wind up making money. So bam, the stock pops out of there. Really nice move. Massive volume on that day. About twice average volume, and then the stock's off to the races. Now we're into January. Not so good here. Thank God we're not in this now. Then we're waiting. Now we're into February. This is really, really bad. And then what happens? We get a nice move here. Yay. Big, huge move higher. And then more consolidation. You'll notice a difference between this pattern here and this back here. This is really volatile and choppy, and frankly, it's a damn mess, whereas this was really orderly and gave us a nice move. Now, it would have been nice if it had moved higher, but It'd be nice if I had 10% body fat and I was better looking too, but I'm doing the best I can with what I have to work with. And that's what happened here with this stock. However, doesn't look like much here, but let's say you're buying it around here. At one point, just a couple days later, the stock's up 17%. So it ain't too shabby coming out of a pattern like this. Well, we don't have that pattern now. What we have is this sideways range. It's kind of drifting a little lower, still kind of trading in this range between 90 and say not quite 110. But you'll see, generally speaking, this 90 level holds up. Now we're into the 18th of the month, just earlier this week. And then this is what it's looking like on the 19th. This is a couple days ago. You can see trading volume has been low all the way through. We like to see within an uptrend, and this is within an uptrend, we like to see sideways consolidations on low volume. We want to see the low volume because what that indicates is a lack of liquidation by institutions. If you see high volume, that's institutions dumping their shares. So they're not doing this now. This is kind of, again, another touch and go, another moneymaker pattern, because what? It's right up against the 50-day moving average. And that is, again, that's what we like to see. Okay, so I looked at this and I decided to take an early entry on this stock. And it's something, by the way, if you're a member, you may want to check out today's strategy session, which I actually did live. And I went over this in pretty great detail, not just GeneDX, but some stuff on Spotify and a few others. So definitely check that out. And also be mindful that now I'm publishing the transcript too. And at the lower right-hand corner of your screen is actually kind of a summary. So if you don't want to listen to me yammer on for half an hour or 40 minutes, which, by the way, you can do double speed, and then you hear me talk like that. But then you can get through it twice as fast. You may just kind of want to look at the cliff notes and take it from there. Anyway, but it's definitely something that you probably want to see. So back to here. So, and I talk about this early entry as a way to keep a lower cost basis on a stock that ultimately you're buying because it's breaking out. So what do we have here? We've got this stock closed near, almost right dead balls on the high of the day. Volume still not quite average, but not looking too bad. So on this day, this is a day that on the active trade list, I put this on the list at 94.35 down here. And then what happens the next day? Nothing. It's a dud, right? No, well, we're not looking, we're buying in congestion here. I'm not looking for, if only, but I'm not looking for this thing to just rocket the next day. This is still at resistance at 110. I'm just trying to get a little early start, 10, 15 bucks before it hits resistance. And then because this is squeezing the way it is, then I'm anticipating, I can't predict, but I'm anticipating a nice breakout to the upside just because that's what we've always gotten here. So it's like, will history repeat itself? Probably. Okay. So I take an early entry here, small position, cost basis down there. And then this is where, this is what happened today. Now, let me show you where all the lines were. Okay, so I was drawing this line here. That's downward resistance. I'm drawing this line. This is upward, really upward trending support right here. So this is the pinch that we're talking about. So I decide I'm going to enter this stock here on the 19th at 94.14. Okay, then the stock the next day worked out pretty nice. Didn't even come back to my entry point, not even to test that. And then today we get a follow through. So it's like 2 days down and then bam, I'm in. The next day, resting a little bit. Following day, meaning today, oh, a gap down, boom. this thing takes off. And so what we're having here is we've got a low entry, relatively low entry on this stock. And then come Monday, I didn't really talk about it today, but come Monday, if the stock continues to be strong, or even if it were to say pull back like to this level, that's the time actually to be building on a bigger position, because you've got confirmation. You got confirmation that the stock is holding support. You got a little position there. And now because of that, you can you can start building a bigger position because you already have a low cost basis. So your risk is not really as high as it would be if you're just scrambling and chasing a stock that's up almost 7.5% in a day. And by the way, on the initial entry, stop was here, down here at 85.30. And then just today, because of this move, I put the stop up to 88.25. You could put it up even higher, but the reason I'm choosing not to is because, first of all, it's still kind of a small position, but also the stock's pretty volatile. So I could see it coming down here, testing that level, and then taking off again without me. So I'll kind of keep the stop loose on this for now. But if history repeats itself, as it tends to do, we're going to see another nice move higher on GeneDX. Okay, so that's all I got. And again, watch for my emails and my videos next week explaining the cool stuff about Stock Watch and Trade Track. I promise you this. I promise that if you use them, your trading results are going to improve. I mean, frankly, you can't. It would be impossible for you not to improve. And I mean this, it would be impossible for you not to improve your trading results if you use them the way I'm going to show you how to use them. That's why I built the damn things, okay? All right, talk to you next week.